Hi, good morning this morning. This is Malenkibi and this is another video or continuation of video on pips calculation where I showed you how you can calculate your pips and know how much amount of money you are going to risk per trade. So I showed you from trading view and now I want to show you from MT5 and practically execute a trade even though I'm already in a trade. So I'm just going to use it for the purpose of this video to explain to you how you can calculate your pips and how you arrange your layers properly. Now this is where I entered the market. This first entry, this red line, this down red line, the one at 3368, look at it here, 3368.7. That is where I entered the trade, 3368.7. So look at it here, this one with the red, yes, this first one, 3368.7. That is where I took the sell. Then I later added my entry, my second position at 3371.6. I put a sell limit there, then the market went back and picked the sell limit. Now then I added another sell limit at 3373.5. Now the market did not reach that extent, that is why it has not triggered yet and it's still showing sell limit. Had it been the market went back and touched this my sell limit, it's going to show you red color that the trade has triggered and it will be either paying me or I will be making loss. So now when I first entered this first trade, I put my stop loss at 3379.9. Look at it here. That is my SL. You see it's written SL there. So that's where I put my stop loss for this entry. Then this second entry, after I set the sell limit, I also put my stop loss the same 3379.9. This last entry also that did not trigger, I also put the same stop loss. So all the three have the same stop loss. Now let me show you each of these layers, how much am I going to lose if the market go against me and hit this stop loss. Now this first one, I'm going to lose 56.75 US dollar. I'm going to lose $56. Now this second one, I'm going to lose $43.9. Look at it, $43.9. Now this third one, I'm going to lose $32. Now if you calculate everything, 56, let's calculate 56 plus this second one, 43 plus the last one, 32. So in total I'm going to lose $131 if all the positions has triggered. This first one is in, second one is in, so had it been the third one is in also, then I am, and the market went against me and touched this stop loss, I am going to lose $131 in total. Now let's calculate my profit also. Now this is where I put my TP 3346.8. Now if this first entry should go in my favor and touch this take profit, I'm going to make $109 for this position alone. Now let's calculate everything. For the loss, I'm going to lose $56, but for the profit, I'm going to make $109. You see, it's worth it. Then the second position, I'm going to make $124. Meanwhile, I'm only losing $46 if it hits stop loss. So $124. Then the last position, which I'm losing $32 if it hits my stop loss, I'm going to make $134. You see, in total, I'm going to make $367, and in loss, I'm going to lose $136, no, $131. So it's worth it. It's like 1:1 or 1:1.5 or 1:2 also. You see, so that is what you should be doing in any of your trade. Your risk, what you are risking should be less than what you are aiming for. Now, layering. The first position is minusing me $6.7 right now. This is my first position. Now, but the second position that triggered, it's paying me. It's paying me $5.8. Now, in total, I'm only losing 0.7. I'm now in profit. Meanwhile, this one is still in minus, and this is the only one paying me. So now imagine this position comes down toward here. I'll be making around $50 because this second position will be paying me much. This one will also be paying me. Now imagine all these positions triggered and it comes down here. I am going to make a lot of money. Now imagine if they go against me, I'm going to lose not much. That is just the power of layering. Now, had it been I only use one position, this first position that I entered, I would still have been in minus $2, which is this. But now already I'm in $8 profit while the first position is still in minus. Look at it, because the market is coming back in my favor. So had it been this one has triggered, I will be making a lot of money, which if I wish, I will just close the trade. Now that this first position is almost in profit, just one minus $1, I'm at my plus $9 in profit. You see, and this one is paying me $11. So it's just because of this minus that you are not seeing $11 here. So this is just kind of accumulation, like total of this plus this. So that's it. Now that is the power of layering. If you put more position while the market is giving you negative, is minusing you, you will have more chance when the market is coming back against you than if you are having only one position. And even I don't have this position, I will still be in minus $7. But because I have this second position, the market is still paying me. So had it been the other one triggered, I will be making a lot of profit. So that's the power of layering. So that's why we use layering strategy. So now the pips calculation, if you want to know how many pips I'm risking, you just calculate from my entry 3368.7 to my stop loss 3379.9. 3368.7, 3368.7 minus 33, my stop loss now, minus 3379.9, 3379.9, that is minus times 100. This calculation is wrong. 11.2, that's times 10. I am losing 112 pips. I'm losing 112 pips if this one is going to touch my stop loss. If this first position is going here to touch my stop loss, from here to here is 100 and how much? 112 pips. Now if dollar is at 1,550, that means I am losing, let's say I'm using 0.0, let's say I'm using 0.05. So what I'm going to do here is I will say times 155 naira, 17,360 something, times 5, because I'm using 0.05. That is micro lot size times 5. I hope this is clear. 86,800. That is the amount I am losing in naira. But because this is a dollar account, it will be showing you in dollar. So now let's check. That's 56.75 USD. 56.75. 56.75. 1550 times 56.7. You see, it's almost the same amount. Maybe it's just the dollar difference. The what is it called? The dollar rate. The dollar rate. That's just the reason why you are seeing a bit interval in the distance. So that's just how to calculate your pips. If you can convert it in naira, if you want to do it in dollar, the same thing. Now in this second position that I entered at 3371.1, 3371.1 minus 3379.9, that's our stop loss. We are losing $88. If you say 8.8 times 10, $88. We are using 88 pips, sorry, 88 pips. And if it is the profit, so from here, from this position to here is 88 pips. Now from this last position, that 373.5, that 373.5 minus 3379.9, 64 pips, because if you say 6.4 times 10, 64 pips. So from this position to this is 64 pips. So now from this position to our take profit at 373.5, at 373.5 minus our take profit is at 3346.6, 3346.6 times 10. That's 269 pips. So from here to here is 246 pips. Now look at it. The market went and hit my second position plus my first position. Now I am in total profit. You see, the market is paying me $28. Now, had it been I don't have this position, this second position, the market will only be paying me $6. But because I have that good position on top, it's paying me $26. Now, had it been this one triggered, I will be making around $50. So that's the power of layering strategy. That's the power of putting more position when the market is at minus. So you see, I'm at around $29, 32. You see, so that's just the power of this layering strategy. So I think this is clear. I said, let me show you the practical example of how I put my layers and how I put my stop loss. If I like, I'll still add another position here, another sell limit, and put the same stop loss and put the same TP. But I'm not expecting the market to go back to that position. And you see, I'm going to make $148 if the market take this, my last position, and I'm going to lose only $18 if the market hits that position. You see, that's just the power of layering and adding more positions. So that is that about that, and see you in the next video.